So it's been a while since we made a video on financial education, but last week I saw something and I thought, okay, we're going to talk about this because once again, he's gone back to his methods of shelling, scamming, dishonesty. Dishonesty is a good word. What I would describe the channel as is dishonest financial education. And today we're going to talk about this. I've made plenty of videos before. I always, when something new happens, that's when I kind of say, look, you got to be really careful of it. And people always say to me, like, why do I make these videos? And some people think it's kind of some point of jealousy or something like that. It's not a point of jealousy. It's a point to make you aware of the shelling, the dishonesty. And if we just look at this, the definition of a shelling here is a scam. Dishonest methods to acquire the value of something. And in my opinion, it's the value of being dishonest to try and gain more viewers and to make more money personally from those viewers. And that's what his aim is to kind of attract the newer investors into the stock market. Go, I'm absolutely amazing. Not being honest, get them to pay for the private courses and he makes more money from it. And my view here is that I have a smaller channel, but with the small channel I have is make people aware of it. And the people I'm trying to make aware of it, and I see it all the time, especially when I look at the comments of these videos here, is the new investors. The new investors get attracted to this channel and then eventually in the longer term they'll realize actually this channel is very dishonest, but in the short term they can get fooled by some of the tricks, the magic tricks that goes on with this financial scammer guy. Now, the reason why a lot of new investors get attracted to this channel is because when you search stock market on YouTube, he's one of the first channels that come up and people click on that channel. And what we see is hundreds of thousands of people fall into this scam every single week by watching these videos. And I've made plenty of videos calling out previous scams. A few of the scams that he's been doing previously are a lot bigger than this one. But today I want to show you some of the dishonest tactics that he uses in his videos, as well as being a relatively poor investor as well. And hopefully that kind of clears it up for you. So what I'm going to do is I'm going to go back to this video here, which is about a $90 stock that will change your life. In reference, this stock is to Elf stock. Now, when we look at Elf stock at the moment, the stock had a good week. The stock was up 40%. So obviously he chose to talk about that stock and act a genius. Look, oh, I'm absolute genius because I'm up 40%. When we zoom out, this has actually been a very bad performing stock. The stock is down 42% still on the last year. If we were to take out the bounce that we did have on the stock was actually down 70+%, which says to me, if you were a good investor at some point, you would have tried to get rid of some of this position before the stock had fallen down and you took this big loss here. Anyway, what he kind of wants to do in this video is he tries to act like a genius about this stock performing very well. Now, if I just go to this timestamp here and listen to what he said during this video, this part of the video here.
Everybody, what was going to happen, and now people are beginning to understand. Okay, no. Listen, man, obviously I own this position, the public count, up 1,143%. I own in other portfolios as well. I'm a very happy shareholder. After those earnings, after the Bieber news there, I walked away feeling like I wish I owned more shares. I wish I owned more shares.
Right, so listen to that. Very happy, told you so, tried to do the victory lap, wish you owned more shares. So that's a key thing to look at here. I wish I owned more shares. Now, this guy made a video on Elf stock, which was around about February time, the 7th of February 2025. Now, if you look at this here, and this is the thing is that I'm pretty good with numbers. And there's a lot of things I'm not good with in life, but numbers is a good one. And I'd be very good as an auditor, especially for some of these YouTube channels that just talk a load of crap. So keep buying Elf stock and don't stop. This is on the 7th of February 2025. Now, if you look here, the cost basis on this position is 7,279. Remember that number. Now, if we go back to the one where he's gloating, look at his cost basis total. 7,279. For anyone that's a bit slow and not making the connection there, in the last 3 months, even after putting a video out saying keep buying Elf stock and don't stop, this guy bought no shares in those 3 months, but yet he's doing a victory lap. So the period where the stock then went to the cheapest price here, the stock fell another 40%, and the shares that you would actually be up on, now 100%, in that time, bought no shares. No shares. So he's doing a victory lap saying buy, don't stop, didn't buy a single shares, and the point where you would have bought and probably made the money from, he didn't buy during that time frame. But yet he's here doing a victory lap, celebrating it. Now the question goes to why would he do this? Why would he not buy a stock that he was so convinced on? Well, there's a couple of reasons why. So first of all is when you look at the percentage. So when you are, as we say, trying to attract these new investors that come onto the YouTube scene and they don't have that much knowledge in the space and they're trying to look for someone and you're trying to sell like, oh, I'm a really successful investor. Look, I've even got a Ferrari, a second-hand Ferrari. And then you look at this position here and you're looking and you're thinking, oh, this guy must be really good because he's got a stock that's up 1,000%. Well, this is where the key thing comes into, and I say this quite often on the YouTube channel, is that it looks good being up 1,000%, and it's a lot easier to sell courses when you've got that number, or your priority is making money in the stock market. Now, if your priority is making money in the stock market and you're a good investor, you probably would have looked at that dip there and you would have bought the shares and made the money. If you were so confident on the stock, if you're such a good investor, you would have bought them at the lowest and made the money. But the problem is then what that would do is that would actually lower your average down. Your average would have come lower. And at a $7,000 cost basis, that's, when he's scamming people millions a month, that's quite easy to increase it. So he could have even doubled, tripled, quadrupled his position up from there. And he would have made more money, which as an investor would be more important. But his average would have come down. So that 1,000% gain would have dropped to, 100% up on the position. Now the difference is, and that's where it ultimately comes to, do you want to be, are you an investor that makes money on the stock market, or do you want nice big percentage returns and look a genius to sell courses? Now, obviously it doesn't fall in the category of being a good investor that wants to make money on the stock market. The main aim is to sell courses. And that's why, in my opinion, it didn't average down on. The other thing is that it makes me laugh that this stock is so promoted by this guy. He does like to promote this stock in particular as, I'm an actual genius stock. But look at the cost basis here. A $7,000 cost basis. Now, if you look at this guy's portfolio here, this portfolio might be something around about 2 million-ish or something, which a lot of it has been funded by scamming people into thinking he's a good investor and getting people to pay for courses, sponsorship deals that have turned out to be horrible, YouTube views by attracting these investors that don't really know anything, and new investors until they realise actually it's a bit too late and they've been suckered in with these stocks. It's a $7,000 position realistically is nothing. If you look at a relatively position that is flat on, a new one, which is an AMD position, that's a $281,000 position. Now to work that into comparison on what ELF is on the weighting point of view, as a percentage, the ELF position is 2% the size of that AMD position. And to put it into context of the portfolio, that ELF position is a 0.3% position in the portfolio. Absolutely nothing. So yet this guy is so confident on this stock and he acts a genius for picking this stock. Well, if he's a genius, why is it only 0.3% of your portfolio? Wouldn't it be like 3, 4, 5, or up, something to the size of the AMD position if you were so confident on the position? Wouldn't you want to make money on it? And this is what I always say about this guy, is that I call him a scattergun investor, a dartboard investor. Now, he's kind of reduced that down in the last 1 or 2 years. So once again, some of the new investors don't realise this. But previously, what this guy used to do is he used to buy a few of these stocks and he used to buy these really small positions. And if they worked very well, he would keep them in the portfolio. But there's been plenty of darts that this guy's thrown into 7,000, into this position, into this position, into this position, and sometimes even more money, and they haven't worked out. And then what this guy does is he then sells out of those positions and hope you don't notice it. It's the right sneaky tactic, isn't it? Now, there's a couple of other things that I'm going to touch on here, but that was the main point there, talking about this guy that doing a victory lap, but this guy that's doing this victory lap, yeah, okay, you're saying like it was an obvious opportunity and you're telling people that buy this stock and don't stop, and yet you haven't bought a single share since this time frame. Absolutely crazy to me. Now, the thing is that during this video, once again, it shows his lack of financial knowledge. And what he goes on to do is he goes to say that he thinks that the recent ELF earnings were good earnings, an A minus, which is just absolutely bonkers to me. Anyone that's got financial knowledge will realise these ELF earnings were not good earnings. They were actually pretty poor earnings. Now, what a lot of people get suckered into is the analyst numbers. Beat by 0.06, revenue of plus 3%. Oh, look, the beat numbers. Look, the beat analyst numbers. The only problem is that analysts move the bar all the time a couple of months before earnings to make it easy for them to beat numbers. If you go to what analysts were expecting 12 months ago for this quarter, these numbers would look absolutely awful to what they were doing previously. The reason why is because previously, when you look at what ELF were doing, this company was growing at 70%, 70, 80, 71, down to 50, 39, 31, down to a 3% growth. If you told analysts 12 months ago that this would have grown at 3%, that would have been way below the numbers that they're expecting. But because lower the bar, then it doesn't look so good. It looks okay. Now, the key thing is that they pull the 2026 financial year outlook. And this guy, the clueless guy that he is, just goes, well, it's nothing. You can understand why they're pulling the financial outlook. Now, what we know and what I've been saying to you guys for a long time is that any weak companies right now are going to use the tariffs as a thing to get out of giving financial outlook on the company. It's like the get out card. And this guy passes it off as absolutely nothing, which is just terrible. Because if they're pulling full year guidance, there's a reason for it. It's because they're financially performing poor. 2 points here. First of all, look at competitors. So one stock that I said was a lot better than ELF is Warpaint. I think Warpaint is a better cosmetic stock than ELF. Look at their outlook. The board expectations for the group financial performance in 2025 are unchanged. They haven't changed the guidance or they're saying we're going to meet it. But these guys are having to cut their financial year guidance and blame it on the tariffs, which is just, Warpaint are getting exactly the same makeup products from exactly where ELF are. They're getting a lot of exposure to China. Now, the thing is why they're doing that. Well, the reason why ELF are having to pull the financial guide is because you look at the growth, they've had to go from 70% down to 50%, down to 39, 31, down to 3%. Now, if you look at what analysts were expecting them to do, analysts were expecting ELF to then go up to 7% growth in the next quarter, 18% in the quarter after that, 18% for the full year, which then would mean an even bigger growth after probably the September quarter. Now, honestly, guys, as a company, to get from 3% growth up to that growth is insanely tricky. In fact, I'd be willing to make a bet that they won't be able to achieve that growth. So for ELF, they've got to pull their outlook because they're going, there's no way we're hitting these out analyst numbers. So how we're going to get out of it? Well, we're going to just have to pull our guide and say, look, we can't hit it because of the tariff situation. The real reason why is because this company's starting to struggle. It's starting to deteriorate. Look at the growth slowing down and you look at what analysts are expecting to do. No wonder they had to pull that outlook because the management team looking at those numbers and they're thinking, there's no way we're hitting those numbers because we're only growing at 3% and they're expecting us to get up to plus 18% by the end of the year. That's the reason why. And if you ever wanted more proof of why a company is struggling on a growth, is they go and make an acquisition. They make an acquisition to grow the business. And that's exactly what you saw with Celsius. Celsius did exactly the same thing. Now this guy, the clueless guy that he is, has no idea why that is happening. The reason why they've had to go buy a brand like this is because the growth's gone and you need to go get growth back. And the problem is with ELF is that this company's trading at 31 forward times earnings. Now we've already seen what has happened previously. The growth starts going. Look at what happened to ELF stock. ELF stock absolutely collapsed. Now the stock went from the peak at the start of 2024 down by 70% because the market started pricing in going, bloody hell, the growth's going from here. Let's get out of this. This company's now struggling. This is not popular anymore. Now, the problem is now that ELF have gone, bloody hell, if we're trading at 31 times earnings and we've got no growth, this collapse is only going to continue. This collapse is going to send us, down to $50, $30. And the only way they can resolve that is to make a panic acquisition. And that's why they made the panic acquisition. I can bet you right now that ELF in 6 months' time, 12 months' time, without this acquisition, because in the short term, the acquisition is now going to boost all these financials that it looks like they're getting growth again. But if you actually look at the core business, if they do split it up, and you look at the ELF brand, I bet you that ELF brand doesn't get above 7% growth for the next year. Bet you it doesn't, because the brand is peaking now. But because this guy has no financial knowledge, he doesn't know, he doesn't understand that. And that's why he's like, oh, it's all okay. This acquisition's good. And the other reason, another thing they don't mention during this video here is that why would Hailey Bieber sell this brand? Well, we know with some of these celebrity brands, sometimes they can be longer term brands that actually maintain success. But quite often, some of these celebrity brands, they have the kind of surge up for the next 2-3 years, and then eventually they drop back down again. Now, this brand could be something that's successful for the next few years, but is that going to happen? We don't know. It could be one of those brands that drops off after 2 or 3 years. We don't know. But trying to act a genius around this elf brand when the elf brand is clearly struggling, yeah, you got a company here that's making acquisitions to cover the cracks, and there's clearly absolutely no mention of this overall. So yeah, I wanted to make a video about this because obviously overall this video here was really deceiving, and as I say, it was a bit of a shell, really. It was being dishonest to his viewers, and there's little things of dishonesty that goes on this YouTube channel, and I wanted to kind of show you that. And I also wanted to show you the lack of, for a channel called Financial Education, the lack of financial education that this guy has. The things of like acting a genius when he didn't even buy any shares himself during the whole period of the dip, even though he was producing videos saying buy the dip and don't stop buying the dip. The things of like, why didn't he buy the dip? Well, the reason why is because it's easy to shell your personal courses when you're showing stocks that are up 1,000% realistically, when if you were a true investor, you'd be actually focusing on making the money on the stock rather than just showing off the gains. And it just shows you that from the point of view of like the dart throwing investing theory method he had, doesn't do it as much now in the last 2 years. That is something that has stopped, but it shows you what previously he had. And also lack of financial education, where not understanding why the financial outlook has been pulled, understanding why the acquisition has been made, and understanding why the share price has been collapsing and because of the valuation, and then the risks with this bolt-on acquisition that is there to try and get the growth up. It was just a video of dishonesty and also a video of lack of financial education. So that's the two things I hope you take away from it, is this guy, how dishonest this guy can be, and how he tries to deceive his audience. But also, I wanted to try show you a point of view of like, some people make mistakes in the stock market, and that's clearly a guy that's making mistakes in the stock market, and how you can avoid, falling for them sort of mistakes. So yeah, hope you enjoyed the video, guys. Thanks for watching. See you in a bit.